Hello everyone, my name is Grega Horvat and welcome to a new video analysis in which I will, as you can see, cover a lot of markets. So, as you know, we have seen interesting volatility in the risk-off mode during the past week. So, we have some interesting developments here. However, US dollar is not showing any clear breakouts on each FX pair just yet, but it could be very interesting during Christmas holidays. So firstly, as always, we will begin with the euro dollar. Now, euro dollar is still in this big downtrend, as you know, and I'm looking for a free wave drop to a new low. Also, I'm looking here for this 78.6% of this 5-wave rise that could be triggered maybe late in 2019. However, nothing moves in straight line, as you know, so I'm expecting firstly a bigger recovery. Ideally, we will see some signs of euro recovery in January, because what I see here is 5-wave drop, okay, and after 5-wave drop we should see at least 3-wave recovery. So we have seen here a 3-wave recovery, but because this was very sharp and fast wave 2, while current decline is not so strong and accelerated, definitely not, it's not accelerating to the downside. I assume that this whole move down, okay, could be actually part of an ongoing complex correction. So the idea is that we are still here in a wave B, and that market may look for 1.1150 area, maybe 1.12, and then we see a reversal higher into this wave C. However, of course, there are chances that market will just accelerating to the downside. In such case, of course, I will definitely consider this alternate count and will adjust the views to more aggressive versions. However, on the 4-hour chart, this is probably the most important at the moment. We have only 3 waves of recovery, so it's not important if I'm expecting some kind of a euro rally in January. I think that the next leg is down, and that this low here early from November could be retested, because I said this is a 3-wave recovery that was reversed at the end of last week after just a small spike here at the highs. Okay, so I'm looking for more weakness ahead. Now cable is also here trading to the downside, but again, notice that this is a very slow move to a new low. Okay, we have seen here move close to 138.2% extension of wave A, which is some kind of my maximum fib extension when it comes to wave B that I'm tracking as part of an irregular correction. So if I'm on the right track, then maybe we should see really a reversal higher from this new low, because I'm expecting still another low, because on the 4-hour here, as you can see, the recovery is slow. So it looks like that we may see another low ahead, but then watch out or be aware of a reversal. Also, if you take a look here on the 4-hour, you can see that we have clearly a lot of overlapping declines. So if someone thinks that we are in a wave 3, here a very strong decline will begin, okay, that's definitely possible, but at this stage, based on personality of the moves, I still think that because this is slower price move than any previous declines, I expect market actually that will see an increase in momentum, but in such case, actually the price could lift, could be seen higher, especially if because there were a lot of negativity around Brexit, but I think that investors are just waiting or are excited to hear some positive news from Brexit, and if this will really occur, then or happen, then I think that investors will just try to grab it and could very quickly cable travel to the upside, but again, only for temporary or limited time, because I'm looking here as a part of an ongoing flat correction. So sooner or later, I think that in 2019 prices will still be lower, because I'm looking here for a drop into wave 5 to complete this 5-wave drop in larger wave C of a 3-wave movement. Okay, now Aussie dollar, I'm short Aussie dollar actually from here, from a week back or so, and so far this one played out very well. And the reason why I went on the short side is very simple. Previously we had a 3-wave recovery that was reversed very strongly by this bearish price action. Also, notice that market took out this lower trendline support, and after this breakout, market just went sideways. Okay, so because prices back then actually were slow, this was just my confirmation that actually we are in a corrective phase. It would be a totally different picture if we would see an aggressive rise, because I would probably then relabel this whole structure as a flat. But because market went slow, this was just some confirmation that it just opposed with an ongoing downtrend. And I expected at least third leg to the downside, and it looks like that this third leg is not going to be a wave C, which would be one of the options, but probably an ongoing 5-wave strong impulse. Okay, so I'm seeing more weakness ahead, and based on the daily chart, there's actually this low from October that is not far away, so I'm expecting this low to be triggered. So maybe after that we see some pullback, but then real weakness should resume into wave 5, into this Fib extension levels. Now looking at the weekly, you can also see that there is room for much more downside. Why? Because this recovery up from 2016 to 2018 was clearly in 3 waves, and of course this low has to be taken out. So ideally we are looking for targets in 2019 towards 0.6 actually. Okay. Also, another important indication for Aussie weakness is definitely Chinese currency. So you can see here that Chinese currency, okay, is here trading, is actually falling against the US dollar. But what is the most important when it comes to analysis, intermarket analysis, is that actually here we see a wave 4 triangle. So despite Aussie dollar being very aggressively already at the lows, probably impacted by the risk-off move on the stock market, I think that once Chinese currency will see a breakout against, when dollar will see a breakout against the Chinese currency into this 5th wave, that's when Aussie dollar could really trigger even more downside, okay, even accelerated the downside. So watch out for more weakness here, because Aussie dollar is weak and dollar against the Chinese currency is still lagging. Also, let's take a look now on dollar CAD. Now dollar CAD is finally, really finally, I mean, this pair has been constantly trading to the upside. I have been talking about and we're expecting this move higher, but it was so unstable recovery that it was very hard for me to put any trade in here, okay, because we never got any clear impulsive rise, okay, and also we never got any clear 3-wave setback. There were some sharp moves, but very fast, so it was very hard for me to put in any valid, especially from a risk reward perspective, to any good valid setup. But anyway, now finally we see this acceleration, okay, which I was looking for all of the before. So now, because we are seeing the strongest wave since market actually turned up from September, I'm assuming that actually we are in the middle of wave 3, because wave 3 of wave 3 of wave 3 is typically the strongest wave. So I will be expecting more upside. I see prices now at 261.8%, but we'll be looking for more upside after any pullback after wave 4. Now, real invalidation level, if I show you, is obviously here, because we are in subwave 1, 2, 3 and expecting wave 4, then you know that prices should not trade into this territory. But already a break or overlap with this black wave 1 would obviously say that, or indicate that we are again turning to the downside. On looking at the bigger picture, what I really like here on a daily, that we are now finally breaking this upper trend line of this channel, which means that we are accelerating rather than slowing down at the upper trend line. So this is also a very important indication that we may see an extension higher. Also on a weekly chart, I mean, here is room for much more gains ahead, clearly, because setback was in 3 waves. This was a rise, this like a leading diagonal. I have been looking at that a lot, and also we pointed out that we are still above this rising trend line. And also notice that this pullback, okay, which came close to this trend line as well, more importantly, it found the support at the previously broken trend line, okay. So it was a perfect setup, and it looks like we are going much higher for 2019. Now looking at dollar Swiss. Now dollar Swiss is definitely also pointing for more dollar gains, especially because each pullback from the highs that we have seen, okay, has been made in 3 waves. So I'm expecting more gains. This was a 3-wave setback, and if you're closely following my analysis, then you know that I was expecting parity to see again, and looks like that we touched this, and now we are making a similar pullback. Okay, so this was a pullback of a higher degree in 3 waves, and now we see pullback of a lower degree. So I'm expecting more upside. I'm not really sure if we are already at the early stages here, because there is a possibility of a flat here for wave B if we consider that wave C was very small compared to wave A after a breakout of the triangle. However, this is possible, so I will observe price action very closely once we get towards this level. So if pullback from that high would be slow and corrective, something similar like I have been talking on Aussie dollar, then this would be my confirmation that it's a pause with an uptrend. If reversal from that swing high will be strong, which means impulsive, something similar like we see now to the upside at the moment, then this would be also indication that it was a flat after all, and that bears are still strong because they reversed strong, and actually they confirmed in which direction we will probably move. But for now, it looks like that, generally speaking, that dollar Swiss sooner or later will see a retest of these highs. Okay, the only question is if from here we go maybe straight up or maybe after another pullback. Now let's take a look also on dollar index. Now dollar index similar but inverted to euro dollar. I see price recovering, but very unstable, very slow, choppy price action. So maybe we are going to see a final push to the upside and then a reversal lower into wave C. However, again, if price will from any reason accelerate to the upside towards 100, then clearly I would say that wave 2 has bottomed here, and in such case I will go with the market flow. But at the moment, based on the personality of this current lag from here, I just think that we have to be very, very careful, especially once we approach 98 level. Now on the 4-hour chart, why I'm looking higher is because this decline was made by 3 waves. It was actually a sideways move, a flat correction. On euro dollar, we have a deeper 3-wave retracement. Here we had a flat correction where wave B touched the previous highs. But still, we are now on the bullish side and expecting a push towards 98 area. Also, what I'm looking at here is very interesting. Now, here this was a first zigzag, right? Here was the first zigzag. Here was this. Here was the first leg of the first zigzag, and this wave C was very similar to wave A. Okay, so now I'm looking at the second zigzag, which has been from here and is now on their way to these levels. All right, and now I'm looking also at the same thing here, where I think that wave C, okay, watch out for red fib, could be similar to wave A, right? So in such case, I came out with, again, with the projection around 98 level, and clearly this whole decline should be fully retraced if we consider that this move down from November and early December highs was correction after all. Okay, so also another thing is that I'm looking for 138.2% extension of this first zigzag. Okay, so I'm looking for these levels, 98, and then we'll see what happens there. If we are starting, we will starting to see a reversal in impulsive manner, then we know where the dollar should be headed probably next. Now let's take a look on gold. Now gold is very interesting. It could be very interesting for 2019. I know that a lot of investors are turning bullish on gold now after stocks market came aggressively to the downside. But what we have to consider is still the big picture of gold. Okay, gold is still bullish. Bearish, bullish temporary, bearish because of this very aggressive 5-wave drop. But now we are just trading sideways, which means that if we are trading sideways, we can expect a next drop. Now, when this next drop may occur, well, after wave E is completed. Now I'm tracking here a triangle in A, B, C, D, E pattern. So actually these triangles are very interesting because they will cause a new break out of the range when everyone else will give up on the direction, because they will fall into this trap of a triangle. So I'm patiently observing what will happen once we reach this 61.8% level around 1,300. So there we may starting to see a reversal to the upside. However, for now it's still room for this market to be touched. Actually, what I really like is some kind of this spike. You can see here this spike and then aggressive decline, which actually was the start of this wave 3 sell-off. So I'm really curious to see if we rally, so what will happen up there. Okay, there's also this 61.8% of this retracement. So generally speaking, this area is definitely interesting if we will see this level tested next year. However, on the 4-hour chart, as you know, again, nothing moves in straight line. So on the 4-hour chart, I'm tracking two different interpretations. So the first one is actually that we maybe already are looking here for a top. Why I'm considering this? Because I see the stock market moving sharply to the downside. Okay, but I do not see the same maneuver to the upside on gold. Okay, normally during the real crisis, there was real money flow into our gold. So in such case, you have seen an explosion higher on gold. But at the moment, we do not see such a stable, aggressive rise. So I'm really curious to see what will happen in the next few days. Okay, because if stocks are, as you know, on Friday finished at the lows, but gold is making a pullback from the high, something ain't right. So I'm really curious to see if stocks will find maybe some kind of support during holidays. You know, holiday reversal patterns, this is something else. But anyway, what is really important is if stocks will find a support, we may see a gold reversing much lower. So actually I'm observing two wave counts. The first one is that maybe we have seen an ending diagonal here and we are going lower. But again, for confirmation for any shorts, of course, you should see 1240 broken. Now the next wave count, what I'm looking at here is actually a 5-wave move for a wave A. So this one fits better to this bigger picture where I see room for more upside. So this could be wave A, and we are going to see pullback for lower for wave B. But as I said, nothing moves in straight line. So this is very important, very nice, because both counts suggest that we will see a reversal. So I really like this wave count here, where a reversal to the downside will be limited, because after all, I'm expecting wave B. But 1232 could be very interesting if we see pullback to these levels. So watch out also if we see a sharp drop from the highs, then this would be confirmation that we are turning to the downside in 3 waves minimum. Also regarding gold and the S&P 500, now look at this gold S&P ratio. So I'm actually seeing this on very strong rise, but notice that we are here making a wave C. So imagine what will happen once market completes this 5-wave recovery for wave C. Probably we will see a turn down, which means that again money will flow out of gold, which is not that increasingly coming in at the moment. So actually gold could come down very sharply after this pattern plays out, and the S&P 500 again could rally. Of course, we are not there in this phase yet, but it's just good to keep an eye on that. Okay. Also, let's take a look on silver. So here is the silver. I mean, big picture is very important. Clearly, we have lower lows, lower swing highs, which means more weakness should follow, right? So expect another move lower, because we haven't seen a break of these lows yet here back from 2015. So definitely expecting more weakness. We are also this trend line. Notice this trend line, how it's important. We have seen a break below it, but what is very interesting here, similar like as I said with Aussie, if you see an impulsive breakout, like here, this was an impulsive decline, right? And after that, you see a slow price action. This is normally confirmation that market is still on the bearish side, that we'll see more weakness. So I'm looking definitely for more downside here as well, and we'll be expecting a drop towards 12, maybe even $10 if move gets extended. But what really matters on this daily time frame is that, as I said, we are consolidating around this trend line, and that this cycle down is still uncompleted. Okay, this is wave 1, wave 2, sub wave 1, 2, 3, 4, expecting a drop into wave 5, right? Even if you adjust the wave count and say that this is wave 2 and this is a wave 3, and we are now in black wave 4 degree, still would be expecting more downside. At some point I was also tracking that this is wave 2, which means again more downside. So no matter how I look at this, I mean, there's clearly limited upside around 15, and from where we may see a very strong drop. And also what is important here, if someone thinks that metals are headed to the upside, well, notice that silver is not showing the same path. I mean, silver is very, very slow, okay? And again, silver, normally in uncertain times, when stocks are down dramatically, you would see money move into silver, but this is not happening. So I'm just assuming what's going on. I mean, it really comes silver with metals. Silver maybe with stocks come down, or if stocks bounce, silver could down even easier. Also, I have here one chart. Just let me just a second to find it. It's the S&P 500 versus gold ratio. Okay, so here it is. So what is very interesting here is that here is back in 2000, when stock market was in a pullback. You can see that money actually was moving dramatically, very increasingly into gold against silver. So above is gold versus silver ratio. Okay, so investors were more interested in gold than silver in uncertain times, and you can see here that it was the same thing in 2008. So you can see a lot of cash was flowing here into gold as well, much more than silver. But notice now that when we see a quite aggressive decline, actually here I don't see any acceleration to the upside. So for me that's very important, because again, gold in such case, I mean, if gold is not rising now, it's at least it's not accelerating, then we really should be aware of potential drop on gold, especially from an Elliott wave perspective, where I see a triangle, especially if stocks find a support. Okay, so I'll definitely will watch out for this, how this plays out in upcoming months as well. Also, now let's take a look on the S&P 500. Now, here's the S&P 500. Okay, so the S&P 500, I mean, of course, you can label this as a very aggressive bearish count and say that major top is in and that we go much, much lower. But I always try to ask myself, where are the greater possibilities to be right? Is it to be looking to the upside in uptrend, or say the top is in place and we are going to the downside? I mean, if you will always try to look for a top in place, you can be wrong more often than not. You would probably be wrong here, 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 and again maybe here. Okay, because each time after pullback we have seen a new recovery. And also from an Elliott wave perspective, I mean, we are still above this very important trend line support, right? Also, this recovery in a wave 5 should be made by 5 subwaves. This is wave 1, 2, 3, 4, and you should be looking for a push higher into wave 5. Now, another thing is that this drop from a new high, okay, is in 3 waves. So let's take a look. The S&P 500. For now, it's a 3-wave movement, okay? This is wave A, wave B, and now this can be a 5-wave, still ongoing decline for a wave C. So I'm very interested to see what will happen in the next few weeks, because once we will have a 5 subwaves down from 28.14, it will be very important timing for a potential bounce, at least in 3 waves, okay? So I still think that stocks could see some recovery in January. Also, do not be surprised or immediately turn bearish on stocks when you see this market falling, because stocks are acting like this, okay? They show how actually people react to the financial markets, especially, and this is obviously the best thing about the crowd psychology, is to look at the S&P 500, because you always see stock market falling fast because of fear, but rising much slower. Okay, so actually, despite being market aggressively to the downside, there can be aggressive or bullish turn. Okay, and we have always seen, after very aggressive decline, we have always seen a turn. Okay, so don't be surprised if we see aggressive decline. That doesn't necessarily mean that we are in new bearish phase. Okay, it's aggressive decline because of fear, because everyone goes out. Okay, because people want to be safe and want to be in cash. But after that, be aware of potential bounce. But of course, as always, with much slower pace, as you can see. However, of course, as always, I'm a trader. Okay, I'm also obviously an analyst in the first place. But what is important is that I'm flexible. I can adjust my wave counts. I can adjust my views. So I will not say for every price that market will go to the upside, that stocks will go higher, but I will probably say that I am watching the price action, how and its personality, and once it will fully unfold, once I will have more price data to analyze, then I will maybe adjust my views. But at the moment, I cannot say that this major top is in. Okay, of course, I'm tracking for prices to move even lower, but as long as we are in wave C, it can be just that, just wave C of a free wave pullback. But if from any reason we were starting to see acceleration to the downside, which will give me an idea that we are probably more likely in wave 3 rather than wave C, then I will adjust my views, okay, with no issues. And of course, in such case, I will even look for potential opportunities, investment opportunities in a risk-off environment. But even now with discount, okay, I'm still expecting market to move slightly lower because we need 5 waves down for a wave C. So on the 4-hour chart, but I'm looking waves 1, waves 2, sub wave 1, 2, 3, 4, 5, and looking for prices now to come down right into some interesting fib levels. Here we have an extension of blue wave 1, of red wave 1. We have also wave 4 that should play out here. So watch out for a bounce and then another drop. Okay, now if we are very bearish, then definitely you should keep an eye on this wave 4 pullback and the previous resistance. Okay, because wave 4 pullbacks will try to come back with the price back to the area for wave 4 of one lesser degree. Also, if we see pullback towards 2500, we have also these former swing lows here. So this is quite interesting resistance here. Okay, this was former lows and now these are highs. Okay, and if we are expecting wave 4, this could be very nice for more weakness. But then, as I said, a rally to the curve. Now let's take a look also on DAX. Okay, so German DAX also monthly chart. I mean, definitely a very strong pullback, but hey, there were always strong pullbacks, right? So again, I will stay with this flow as long as we are having a higher highs and higher swing lows formation here. So I'm looking for this pattern as a wave 4, and we'll be looking for reversal signs in 2019. And of course, for regarding confirmation that I would say that we are headed back to the upside, you have to see a 5-wave rise. So where's a 5-wave rise? Is it here already? No, it's not. So actually, you need to see this type of a price movement. Once waves 1, 2, 3, 4, 5. Once you see this, you can say that we are headed to the upside. For now, it's definitely not the case. But it could be very interesting soon, because on the 4-hour chart, I see prices is now in the 5th wave, and here we have some kind of a wedge, also 5-wave down here from the highs. So watch out what will happen around 10,400, maybe even 10,000, which is definitely very interesting psychological level. This is also very important. And as I said earlier, holidays are here, which means that flows can change, especially because investors will close their books. So it may see a reversal here to the upside, maybe just a few waves, maybe something more aggressively to the upside, but definitely price is very low, and the wave pattern suggests that it may be something around the corner. Okay, now let's take a look also on crude oil. Now this one is also very interesting. Now crude oil has been in much more aggressive risk-off environment. It probably led the way here. But what is very important here on the 4-hour chart, let's say on a daily, that I see prices coming here down into wave A to complete first leg of decline. I know this is a very tough call, not an easy job here, but we came out of a triangle. Now everyone that follows the Elliott wave principle knows that triangle occurs prior to the final move within the larger trend. So which is the larger trend? It's a downtrend. Which is a final move? Well, 5th wave, it's a final move. So watch out for potential reversal, because now when we are breaking out of a triangle, as I said earlier, triangles will try to confuse the traders because market moves ups and down within contracting range. But once the breakout occurs, normally they realize that market is again trending, but that's typically too late. So be aware of potential reversal. Okay, and of course, again, reversal could be confirmed only by a 5-wave rise. So if we see, let's say, move back to 48.30, which was the swing high from December 20th, December 19th, this would be quite interesting indication that we are going much higher, at least for a correction. Okay, now also here we have a divergence on the RSI, as you can see, and also this former swing low from June 2017 is also not far away. So definitely I'm in period of start of next year, I'm expecting crude oil to recover. Why? Because also of the following chart. Now here I have this monthly chart, and notice that each year when market crude oil was falling aggressively to the downside ahead or into the year end, okay, we have seen a recovery the following year, or at least at the start of the next year. So here was in 2006, you can see into the year end, market was dropping. In January, market turned to the upside, right? Again, here in 2008 market was dropping sharply, but in January, the following year, again, market recovered, okay? Then again, here market was trading to the downside into the year end, and again, in January, market recovered. Again, in 2014, market was aggressive to the downside. When it comes January, the start of next year, market recovered. Similar again for 2015, in the second part of 2015, we have seen again aggressive decline of crude oil prices, move to a new low, but then when new cycle, new year begin, market turned to the upside. And again, what if we respect what market has always been doing? Let's say from July till December, if market from July to December was falling, then we may expect a bounce at the start of next year. Not necessarily in January, maybe in February, but in the first 6 months or 5 months, we may see a recovery. So again, we are at the end of 2018, and in 2019, we would be expecting a recovery. And again, if we consider what is going on with the price action on the 4-hour chart, where we see here prices in a 5th wave of decline, and we know that after 5 waves, market recovers in 3 waves. And also, nothing moves in straight lines. We know that pullbacks always occur. That's why I'm expecting wave B. So based on timing, based on the wave structure, based on this approach here, and for the past few years, I really think that crude oil could at least slow down, if not make a major recovery. But again, any recovery will be just only temporary. That's very important. Okay, I'm not expecting any significant bull market. I'm just expecting a recovery. Here was also strong rise from the lows, a pullback. Strong fall from the highs. Of course, you would expect a pullback, and this pullback could actually be very similar to one that we have seen here. Okay, prices could go sideways and then turn to the downside. But it's important to understand that market or bear market may slow down. But after wave B will unfold, of course, I will be looking for a drop into wave C of wave 5, okay? Towards this lower trend line. Now let's take a look also on CAD. Now, CAD and Aussie against Kiwi will look at, because I can see markets in very aggressive risk-off mode. So definitely yen crosses could really lead the way here. So CAD yen, it's very weak. That's why I wanted to highlight here. What I see is actually that we dropped out of this upward channel. It was clearly a corrective recovery, and now we are moving nicely to the downside, especially after since market retested this trend line or breakout point, if we want, and now we are just aggressively moving to the downside. So if you are risk off still, which I am, for the next week, we will probably see more weakness, but maybe after wave 4 bounce, as I showed you on the 4-hour of the S&P 500 chart. Well, if you consider what there can be happening, more weakness after a pullback, then maybe such pairs like this, CAD yen, could be very interesting, because from in risk-off environment, money will flow into safe haven currencies such as dollar, Japanese yen. So watch out for this one. and could really bring prices back to 80.53. I mean, if this was a corrective recovery, then corrective recovery should be fully retraced. Okay, so expecting more weakness here. Also, again, Aussie is acting very weak here. So Aussie against the New Zealand dollar is looking very interesting. Why? Because here is a multi-year triangle that I have been actually tracking this one a year back. And finally, it looks like that we have this breakout. Notice that we are below this trend line. And actually, this trend line has been already retested once here, okay, a week back or so. And I'm expecting another retest actually, because we are in a wave 4. Wave 4 is a corrective wave. It should be made by 3 waves, unless this is going to be some kind of a triangle. But the idea is that we are slowing down, which is normal, because previously market made a 5-wave fall for a wave 3. So I'm expecting more downside into wave 5, okay? So watch out for more weakness ahead here, especially, as I said, this triangle has been broken. Aussie overall is looking weak, and especially if gold will find some limited upside, I think that this could really hurt us in general, okay? So for myself, I'm definitely watching this one very closely. Once, of course, we will approach this another swing high here around 1.06. Traders, thank you very much for your attention. I hope that you enjoyed the video, and we'll talk to you again next week, but not so often because of holidays. But I will definitely be active on Twitter. Okay, thank you very much for your attention. Happy holidays. Bye.